Swipe a card for coffee, file an insurance claim, or buy a share of stock. These actions execute in milliseconds. We tend to assume these transactions are routing entirely through the fortified, highly regulated servers of traditional financial institutions. The reality is the vast majority of these operations run on the cloud infrastructure of just 4 companies: Microsoft, Amazon, Google, and Oracle. While financial institutions face intense scrutiny to remain solvent, the tech vendors holding them up operate outside direct financial oversight. In systems engineering, this architecture creates a single point of failure, a specific component that, if it goes down, stops the entire system from working. By leaning so heavily on a few commercial data centers, the banking sector has accidentally outsourced its structural integrity, creating a hidden vulnerability for the global economy. If a dominant provider like Amazon Web Services or Google Cloud experiences a major, sustained outage, it takes payment processing, disables fraud detection, and pulls trading platforms offline. As this map shows, the shared infrastructure model means an outage causes multiple major institutions to go dark simultaneously. A major server failure in this environment poses an immediate threat to the stability of the global economy. To address this risk, the United Kingdom has stepped in as the first major global actor to intervene. In July 2026, HM Treasury announced a new regulatory framework targeting the major cloud providers directly. Microsoft, Amazon, Google, and Oracle are now officially designated under UK law as critical third parties to the financial sector. This legislation reclassifies these tech giants as critical national infrastructure, ending their status as unregulated commercial vendors. This establishes a legal framework of shared responsibility. The technology company is now just as liable for system stability as the bank it serves. By directly supervising the tech ecosystems that enable modern capital markets, the UK has rewritten the rules of engagement between sovereign governments and big tech. Although this law explicitly names only 4 technology companies, the compliance impact will hit thousands of organizations. This ripple effect means global banks, insurers, and technology vendors in the UK must overhaul their internal standards. Downstream firms must now implement tighter board oversight, aggressive vendor due diligence, and deeper investments in cyber resilience testing. This compliance cascade forces the entire global financial ecosystem to elevate its operational standards to meet the new UK baseline. Financial authorities around the world are watching this rollout closely and are likely to use the UK decision as a blueprint for governing third-party tech risk. Legally and operationally, these technology companies are now a core integrated component of the global financial sector. Because modern capital is simply data, the regulatory frameworks of the world are finally treating data centers as the new bank vaults.